Hi guys, Boris Dwarfman here with LBC Capital Income Fund YouTube channel. If you're not already subscribed, please do so down below. I promise I'm gonna do good content, good videos in the next couple of months. And here's a long promised economic update. Let's talk about recession, what everybody talks about. We have had a lot of economic news in the past few months, a lot of interest rate action, a lot of Fed action. Fed has raised rates again by 0.75%. Our prime rate stands at 5.5%. So the question is, one, if recession is happening, are we in a recession or is it coming at all? And what I think about this. Number one, I think recessions are good. I think recessions are great. This is a moment of truth. You never go up like this. Sometimes you go up like this, right? So dips are good, recessions are good, and I think we are going into the recession. I know there's a lot of people saying that we are already in a recession because the second quarter GDP was negative. 2 months of the third quarter, they announced that also it was, there has been a slight dip. And I know there's a lot of political talk that Pelosi or somebody came out and said they're changing definition of a recession. Recession, by definition, it's 2 quarters of negative growth. So if you take that simple definition, if we once the final numbers of quarter 3 come in, it looks like we are under that definition in the recession. But in reality, I kind of agree that it's not a true recession. Part of it because you compare quarter over quarter. But remember what happened 2.5 years ago when COVID started? The consumption went like this. We had a steep decline, and then we had a steep rise, your proverbial V-shaped recovery. And government printed so much money that people started to consume a lot more than they need. Everybody's getting a new car, everybody's getting a new boat, people buying crap that they don't need. So the consumption really got elevated, partially because people got a lot of money, and partially because there was this pent-up demand. People were sitting at home, not going to the bars, not going to the movies, not going to the Disneyland. In reality, the consumption was a lot more than it should have been, and a slight drop is not a big deal right now. So I don't think we are, it's gonna get worse, but I don't think we are there now. And other part, that there is not enough crap to consume. You know, the producers cannot produce things fast enough, and there's still shortage of chips. So, and part of, you know, and now we have an inflation. So I don't think we are in a recession yet, or will be in the next quarter, but I think it's coming. People will stop consuming as much. People will curtail their consumption. They're not gonna buy as much things, and that's going to throw the country into a recession, which, again, it's a good thing. Keep in mind, with Fed raising interest rates, mortgage rates are higher, a lot higher than they used to be. Once we get into the recession, Fed is unpredictable, but conventional wisdom says they're going to start easing the restrictions. And you can see this already with the 10-year Treasury notes. Interest rates on those have declined. Basically what it means, big money markets react. So if they think rates are good, they buy a lot of it. We're talking about countries, insurance companies, hedge funds, mutual funds. You have your bond funds and your 401ks, IRAs. They all have 10-year Treasury note. So the more of that you buy, the lower the interest rate, right? You know, I think I'm going to become the biggest advocate to turn off your TV. But yeah, stop listening to these pseudo-professionals, pseudo-economists. Things are not as bad as TV would like you to believe. Go try to buy a house. You're not going to see lower prices. Maybe you're not going to see 15 offers, but the prices are still appreciating. They're not appreciating in the same pace. We do not forecast decline in real estate values, at least not in California. So things are good. Interest rates came down significantly from their peak. We think the interest rates will decline further in the next 6 months or so. We don't anticipate real estate prices dropping. And We still think the economy is strong, but it's heading towards recession. Hit me with your comments, email me with your questions, call me, subscribe to my channel, and let me know which topics you would like me to discuss further. I'd like to talk about business and personal reserves one more time next video. I think that's a great topic because once recession hits, some people will lose jobs. I think it's very important to have reserves. Thank you guys, and I'll see you next week.